It's been a bit of a banger of a year for commodities. Year-end strength continuing, and crude oil and gold have each crossed above a big benchmark. Here to talk about black gold and real gold is Phil Streible, senior market strategist at RJO Futures. Great to see you there, Phil. I want to start with real gold, as it were. So we're above 1,300, and not only that, but this week we've crossed above the 100-day moving average. Is this a resistance level we're heading for, or is it a bullish signal for 2018?
Well, I think gold looks really fantastic here. I mean, we've seen sector rotation out of Bitcoin, with Bitcoin being, a lagging performer here recently. We've seen a lot of those participants sell out of Bitcoin, come back into the gold market. I think gold looks really good. We had the 50-day crossover, the 200-day, about 2-3 days back. So that's called your golden cross here, which is usually a bullish indication. I think the dollar here, we're at a 3-month low. That's going to continue to provide some support here. And it's never a better time to see gold cross at 1,300 than coming into the last day of the month here. Usually we get some trajectory upwards into that first week of the new year. A lot of fun buying, a lot of institutional action.
Yeah, a golden cross for gold. I'm so glad you brought that up. And also you pointed out that January tends to be good for gold. That's certainly what Bloomberg data shows as well. If we continue to see a rally in that first month, though, does that just sort of position gold for the bears to start coming in? Or what are the risks to the downside?
You'll start to see the bears come in right when you get around those Fed announcements. I mean, if you look back here at this last one we had in December, December 12th, that posted that low point. That was the first day of the Fed meeting. We were at 1240. And then since then, we've, started that trajectory upwards. So we'll probably sell off coming into that next Fed announcement. And then after that, we'll get the rally after.
All right, let's turn to black gold then, Phil. Looking at oil, of course, a second annual gain. We've seen a bit resurrection, and it's kind of set the stage for another OPEC shale clash in 2018. Who wins out?
Well, we're at the psychological level of $60, so it's really been interesting. The bulls are in control of that market right now, and recent cold weather has provided that underlying support to get it going. I think OPEC will continue to have their very bullish view. They're going to continue to try and curb production, but I wouldn't be surprised if U.S. production doesn't plug that gap here. So we'll probably see oil prices a bit range-bound. I would say the upside, $65 for 2018. I'd say, but we're probably going to average this $55 to $60. That would really be the tighter range that we'll end up trading in for most of the year.